In this episode, my friend Mike and I discuss his experience with the infinite banking concept. We discuss becoming your own banker in general, and we had so much fun doing it, we went long. So we're going to cut this into 2 parts. This is part 1. Thank you for listening. We hope you enjoy it. Welcome to the Banking with Life podcast. I'm your host, James Neathery, and I'm here today with my friend Mike. He has graciously accepted the invitation to come and visit with us. Drove about an hour and a half to get here. We're 20 miles south of Fort Worth. So thank you for driving down, Mike. And I'm excited that you're here, and I'm excited for you to share with us and for the listener to know who you are and what you've done and, your journey with this infinite banking concept.
Sure. Glad to be here, James.
So, we've just chatted maybe 5 or 10 minutes prior to turning the camera on, so this is completely unscripted. We hadn't had a prior conversation about what we're going to talk about, but you know what? We don't have to because, we don't have to script things out and all of that because really we're just having a casual conversation about the infinite banking concept and his experience, and we invite you, the listener, to listen. Mm-hmm. So, well, with that, Mike, I think you've been practicing this for about coming up on 6 years. I do know that. And so just share with us kind of who you are, how you became exposed to this idea and the whole thought process. See, I think that whether you're newly exposed to the idea of becoming your own banker or you've been practicing the concept and implementing it in your life, for multiple of years, I think it's invaluable to hear other people's thought process. So,
sure. So we met, like you mentioned, I've been doing this now for about 6 years. We met, a couple of months before that, I think 6 months before that at a real estate conference, which was actually one of the first times that I'd actually been to a large real estate conference to learn, to just learn in general about different ways to look at money and wealth, right? So my better half and I, we prior to going to that conference, we had gone to Europe and had spent some time, on a vacation out there and kind of saw how they looked at work and how they looked at, money and that kind of thing. And it really,
where'd you go? I love travel.
Oh, so we actually went to 6 different countries. We went through Great Britain. We went to France, Spain, Belgium. We went to Amsterdam, and then we went to Italy. And spent a lot of time and talking to a lot of the local folks, talking with and just really kind of getting that feel of the differences in how they view work and life, and everybody talks about work-life balance and all that kind of stuff, and where you're here in America, we really we live to work, whereas they work to live. So that they have a very different view on what they need from a kind of a generational wealth perspective, and from a how they live their life. So they take a lot more vacations, they do a lot more travel and things of that nature. So at that time,
they eat better too.
They had some amazing meals in
not
Europe.
Belgium.
Well, actually, some decent stuff in Belgium. But one of the best meals I ever had was in Spain, and I think it's it was one of these where they cooked it in a 300-year-old oven and that kind of stuff, and it was amazing. But really came back from that trip with really a different mindset. So she and I, we have very stressful jobs. We still have very stressful jobs, and we spend a lot of time in our work life and our career life.
Can I ask what you do?
We're both in the medical field.
Okay.
I'm specifically in the pharmacy claims side of things. So I spend a lot of time helping members and pharmacies, with the benefits that they need.
Can I get some hydroxychloroquine?
No.
Okay.
Unfortunately, I'm not on that side anymore.
How about ivermectin? Do I need to go to the feed store for that? I'm kidding.
Yeah.
Okay.
So very, from a career perspective, we have we've been very focused on our career, very focused on, that life. So taking that vacation and coming back really changed our minds of how we want to live. When we started putting together, kind of thinking about, well, what does retirement look like for us? I mean, we're in our 40s. We're looking at, Are we where we want to be? Do we have the tools in place? Those kind of things. So, and at the end of the realization, I think a lot of us get to this realization is, well, number one, the 401k isn't going to get us there. We have some savings, from that perspective that's out there, but we needed something else. So that's why I went to this, kind of went to this real estate conference, started, because you hear everywhere, real estate's the way to make a lot of money and, easy to get to retirement and all that kind of stuff. And it makes more millionaires than everything else. So went to a conference, learned, sat through a lot of different presentations. One of the presentations that I sat through was this one around infinite banking, which you hosted.
Thanks for sitting through it.
And I think it was one of your kind of earlier presentations, because but as I was sitting there listening to it, there were certain things that started to resonate with the idea of, well, number one, being in control and not having, and building something that you have control that you can pass on generationally. Mm-hmm. And if you teach your children and your grandchildren how to utilize the concepts, like it can be passed on for generations after generations. That really resonated. The idea of having a system or a way that you could put money into something and then still utilize that money, and the system still thinks that the money's there, is kind of an interesting concept, because there's not many things outside of, kind of like home equity or things like that, where it builds value that you can access in different ways. So that really resonated, and then it kind of fit into our overall plan. So when we came back from Europe, we started looking at a 10-year plan. That was our 10-year. So we said, okay, we love what we do from a career perspective. Even today, I have a very stressful job, still love what I do. But in 10 years, can I be in a place where if I want to walk away from corporate America, can I walk away from corporate America? And that was kind of the goal was okay, what do we need to get set up? What do we need to look at? What tools do we need to put in place in order to, have that ultimate goal that if we want to go work for ourselves, we're comfortable to work for ourselves. If we want to step away from corporate America, we can do that. We're not going to probably ultimately retire because we're still young and able to work and that kind of stuff and like to work. But what does it look like for us for that 10-year journey? And when we started looking at that, we started looking at different tools, and I have what I call my chess versus checkers type way of looking at finances. The checkers kind of stuff is the short term, easy to make moves. So and I put kind of debt, like consolidating debt, paying down debt, things of that nature that are short term things in kind of that chess or in that checkers type. Can we call the phone company and lower this bill? Can we lower the cable bill?
Pretty simple.
The simple, easy stuff,
yeah.
Right? But then I have my things that I call the chess moves, which are the bigger, long term that require a commitment. And I look at the infinite banking concept as being one of these chess moves. So it's one of these things. It's a foundational component of our financial plan and our 10-year plan. But it is also something that, number one, it takes a commitment. It takes a little bit different mindset of thinking looking at the money and how that money works. And when you and I first talked, we started talking about like kind of the cost for the policies and how we put things in there. Like that's a kind of a big pill to swallow. I think sometimes you got to wrap your head around, well, how does that work? And what is the value of it? And what do you get from it? And how does it force you to save, and how does it build value, and how can you then utilize it? So you have to have really a mindset or a different way of thinking. Mm-hmm. So when I looked at this concept, there were a lot of tenets that made a lot of sense to me, but then it took a little bit of some of our conversations. It took some reading. It took some looking at things to kind of get my mind wrapped around it. And then even once I was in it and I started funding my first policy.
Writing those checks, huh?
Yeah. Even if I started funding that first policy and actually moved some of my savings into the policy, it then took a while to kind of then start to figure out, like, how do I really use this thing? And I mean, I've done some policy loans and that kind of stuff, and we actively use my policy, moving money in and out of it and doing different things with it as opportunities come up or as we look to, move our path along on this 10-year plan that we're on.
Yeah, let me, if I can.
Sure.
How long ago was it that y'all went to Europe? And so where are we at on the 10-year plan?
So we are about 6 years on the 10-year plan.
Okay.
Now, it's kind of shifted with life events. So it started out as a 10-year plan. We're still very comfortable in general with the 10-year plan. Of if ultimately I wanted to walk away from corporate America, we could. We are looking at, we do some things on the side and different stuff that, could supplement. Well, they supplement today our regular income, but we also, but then one of the things that changed was when we went to Europe and we started the 10-year plan, we didn't have children. So
that's a very expensive topic right there.
Yeah,
it can be.
So we didn't have children, and life events changed to now where we have 3 children, and it was instead of it being a 10-year plan, it's more now like a 12-year plan, but we're still moving very much forward with the debt consolidation. We're also and eliminating the debt, but also looking at how do we build things. And when I say that this is a very big part of our foundation, so there's 5 in our family. Everybody in the family has a policy now. It's taken us a while to get there, so
almost 6 years.
Yeah,
I don't know. You're moving right along to me. I'm just saying.
My policy is very active. It's now, a little over 5 years in age. It's working. I do have some policy loans that are still outstanding out there on it. I move money in and out of it, but I've used it for a lot of different stuff. It's my primary vault of our family bank. Mm-hmm. Then, my better half's policy is now a year old. It actually turned a year on her birthday, which was April 27th.
We must have backdated to save age.
we backdated it. We backdated it a little bit, but it's now a year old. And then the kids' policies turn a year. My eldest child's policy, it's 2.5 years old. The 2 youngest kids' policies are now almost a year old. They'll be a year old in June. So we put, for her policy, we've structured it in a way that it's starting to get going. I just wrote a kind of a top off check to top it off as far as filling up the.
Paid an additional PUA premium right up to the MEC limit.
Paid it up and put the money in. And that was one of the things when we were originally getting into this. You always told me, you said, we can write this stuff and we can get it to where you can never fill it up all. Get to where there's room to do stuff, and that's one of the very cool things about these policies is you can put extra into them and then they build more value. So I just 5 days before her birthday, I got on the online portal and just had them do a bank draft of, here's the max amount that Carol said I could put in it. So just
Carol's a service in the front.
Yes, Carol's great. Carol, and then with the kids' policies, they don't have a lot of room in them because the 2 of my children are younger, so they're kind of smaller policies. And Kylie, my eldest daughter, her policy is a little bit more flexible. It has a little bit more room in it. But the nice thing about this is I can start to, I can put some money in there, and it's a savings vehicle for them right now. That when they hit into elder life events. So, when they all turn 18, they're going to have some set aside that they could take a policy loan on to, either look at, buying a new car or
that would be 16, wouldn't it? Once they get their car. But I get it. They'll drive your car for a couple of years.
She turns 16 next year or next month. So, but yeah, it's But there's things that. But as far as like having a source of money that they could use if they choose to, and one of the things that we've been trying to teach them is the value of money and the value of the dollar, but also understanding that you have to. It's a really big concept in our house of protecting what we have. Mm-hmm. So this fits really well into that of, you don't want to be wasteful. You don't want to, you want to respect the way that the money and the wealth comes in, from either a job or that kind of thing, and working really hard for what you have, but also protecting what you have. And this is one of those concepts that, they each know that they have a regular bank account, but they also know that they have these policies that are there for the future. And it's, and with my teenager, we have started going through some of the concepts of, at some point, you're going to have the ability to borrow against this, but if you borrow against it, you need to pay it back. And, the idea of taking small loans to finance whatever she needs to do. And I mean, when she's 18, it'll be at a point where there's going to be a little bit of money there. And if she takes care of it, when she's 25 and 30 and that kind of stuff, the way it continues to grow, there'll be more money there for her to do, things like putting down payments on houses, or, if she wants to.
Don't skip over college and those hairy-legged boys that show up.
All that stuff.
But they should have their own money, right?
They should have their own money. I don't want her to have the same life lessons that her mom and I had,
sure,
where we had to cover for other individuals. But there is but it's an idea of trying to instill in not only them, but then, we teach these concepts and we have the conversations about what does the family have and what does the family do from an expense perspective. So then that starts to build their knowledge. So when they have their own families and that kind of stuff, they know how to protect that kind of stuff. And it was really interesting this year. My eldest, she's a freshman in high school. One of the things that she's going through right now is she had to do a financial exercise start to, like, if I was to move out of a house today, what would it look like? And we started going through, like all these things, and like she started figuring out like apartment costs and the cost for, electricity and water and all of the things. And then we said, okay, this is just based upon work. And going and earning a dollar, earning the money. But let's take a step back. Let's really look at your true picture of, so we folded in some of these other conversations of, well, you also have these sources and these other things that we have set up for you that you don't quite fully understand yet, but it does help with your overall picture. So you don't have to go, into, if you don't want to have to do an apartment, well, maybe you did a house versus an apartment. Mm-hmm. And a mortgage is like this versus that. Mm-hmm. And, if you protect your life insurance policy, you could borrow against that policy. You have, $10,000, $20,000 in there that you can go get a house versus getting an apartment. Yeah. So it changes your mind as far as thinking about, you build the value in these things, and then you can borrow against them. You can protect them. Ultimately, you don't have to go talk to a loan officer. You don't have to talk to anybody to get the money, and it's a guaranteed loan. It's the ultimate guaranteed loan as far as the death benefit's going to pay it out at the end of the time, and you can choose when you pay it back. So, like, for her to be able to sit down and have that discussion with her and say, look, you can go get a $100,000 home, with a $10,000 upfront, down payment, and you can have these kind of payments, which are much cheaper than an apartment, or those kind of things, or work toward, or you can do the, or if you don't want to go work for McDonald's, or don't want to go work for the grocery store, or don't want to work for, you could use this money to set up your own business or those kind of things. So it's a lot of fun to kind of have those discussions and kind of teach that to the next generation. But that's kind of where we're at with the 10-year plan.
Yeah. Well, so when you return from Europe and you're looking at, you know, a 10-year plan of retirement, and then you embrace the idea of the potential of real estate, and then that was about the same time then you discovered the infinite banking concept. So do you did you get involved in real estate at the same time, or
I did get in.
It seems like maybe infinite banking became
it's
executed first, or
the infinite banking was executed first. With real estate, I spent a lot of time doing a lot of education from a real estate perspective. I kind of did the circuit. I think a lot of us who kind of get into real estate, and I still would consider myself, I kind of dabble in real estate. It's not something that I try to do. I try to keep myself moving forward from a real estate perspective every year. I try to do at least one thing in a real estate space that keeps me moving forward. But I'm also not in a race. And I know some people, you know, get into real estate and they're like, well, I'm going to just go over, you know, I'm going to go, you know, I've got this much of money. I'm going to go get 4 houses, or I'm going to go get this. I'm going to go get this. I'm going to get leveraged.
100 doors in 10 years.
Yeah, you know,
10 years.
You know, all these different, you know, and get a lot going. And when I first started, I kind of kicked myself because I was like, well, I should be pushing myself harder. I should be pushing myself. And that stressed me out. And then I kind of, you know, it's one of those things, like there's points in your life where I think you have really strong realizations. And it was one of those things. We were actually on another international vacation. We were in Belize, and I was snorkeling on the first day first day of vacation, snorkeling. And like everything that's going through my head is like all of the things that I left at home. Yep. As far as, well, I should be doing this, I should be doing that, I shouldn't be here doing this.
Typical American, right?
And literally, I stopped in the middle of the ocean and just sat there for 5 minutes, face in the water, and I'm like, hey, these are my businesses. These are my things. If I don't, you know, I don't care if my coach or my guru or whoever I'm working with, you know, says I should, you know, like that undue pressure of I need to push. I got to a point I'm just like, you know, no, I'm not going to do that. I'm going to take a step back. I'm going to set a pace that's good for me, that's good for my family, and then I'm not going to stress about it. I have enough stress with my regular job. I have enough stress with you know, our family life. I have enough stress with everything else that I don't need to put this extra undue pressure on myself. And this is something I check myself all the time on, because I am a go-getter, and I also have kind of the shiny squirrel syndrome sometimes, that I'll see something, I'm like, ooh, that'd be really cool to invest in.
Yeah. Fear of missing out. I think I suffer from that.
But it's also one of those things that I have to check myself of, okay, we put together a plan. We've got, you know, these are the steps I'm taking, and real estate's important in there. And I do try to do deals, as, you know, as they come along and as they make sense. And sometimes they are, you know, sometimes they're deals that are in, you know, one of the things with my old retirement accounts, I did roll them into where I have a self-directed, you know, retirement account that I can use to do real estate deals. So I do have that kind of, so I have some of that happening like in like a Roth IRA kind of situation. But I've also used, and this was one of the things that I think is kind of cool, is I have used my policy to help fund real estate deals as well.
Perfect.
So, you know, one of the deals that I'm kind of proud of, and this was one of those where, you know, it doesn't take a lot of capital in some real estate deals. I mean, some real estate deals, you'll come across them and they only require a very small amount of money in order to get into them or to take control of them or what have you. And they don't always happen like this, but one of the deals that kind of fell into my lap was one of our really good friends purchased a house in 2017. It was a remodeled flip house that, you know, had good bones, was in is on the North Texas side of things. And she bought the house, got into it, and then in 2018, she decided that she didn't like being a homeowner, and she had an opportunity to move to Alaska.
Wow.
Okay. Now, at that time, wasn't very much equity in the home. She was kind of upside from a market perspective. She could have sold the house and would have been basically a break even on selling the house. But pretty much what she was looking for was she wanted to get out of the house and wanted to be able to have money to do her relocation to Alaska. She knew that, and we're very, in my circle of friends, we're very, open about what we do and that kind of stuff. And she knew that I did some real estate. So she was asking me about, could you maybe help me sell my house or, that kind of stuff. And ultimately what we came to a decision on was to do what's called a subject to deal, which basically means that I was going to take over her existing mortgage and start making the mortgage payments on it. And we would do the paperwork in the way that my ownership of the house was subject to her existing mortgage. And I was going to give her, a bit of money to help with her, to basically help with her relocation expenses, because she was looking at, several $1,000s of relocation expenses that she didn't have the money saved. And, she was good with the deal of, it looks good. It still looks good on her credit as long as I pay the mortgage. So it's win-win for her from that perspective. And it was just changing the ownership of the house through some legal paperwork and that kind of stuff. So when I talk about, and this is something that even Nelson talks about, is there are times in our life that opportunities come up that we don't always realize are going to knock on your door. And this was one of those opportunities. We were literally sitting in a restaurant having a family dinner. We're kind of talking about this, and it's a Friday evening. We had the deal done before the end of that dinner, as far as, but, it was one of those things. Like, I had some money in savings, but I had more money sitting in my life insurance. So what I did was I we worked out the high level deal of what that was. Turned around that evening, went on the little online portal and said, I need a policy loan of, this amount of money. They sent it to me. And when I say like this amount of money, it was, I want to say it was like either a policy loan of like $5,000 or $7,000.
You got the deal done.
We got the deal done.
Right.
Okay. And
that's a lot of money. I don't care. I don't care who you are. That's a lot of money to here, let me take advantage of this opportunity.
But it's one of those things, like, it was a policy loan from the policy. We set up the deal, and now I have ownership of a property that we've been able to rent out. It's now being used by a family member that is now in that home, and it's going to be his home for a while. So long term,
they're paying rent.
Just like, which, and again, that was one of those things. Like, I am somewhat glad that I didn't take some of the actions, like trying to over leverage myself from the real estate perspective, and kind of moved in a slow pace, especially with what has happened over the last year, and knowing where some of my friends and some of my colleagues in the real estate space have had issues where, they haven't had tenants paying rent. They've been over leveraged on their mortgage payments, and are in a heap of hurt. Whereas by taking it kind of slow and by using and by making sure that I have different types of access to liquidity, that I've been able to go through the COVID thing without any, without really having any kind of major issues. I actually made the decision to not rent my place for 6 months because I didn't want to. I didn't know what was happening. So like, I had a renter that left the property right before everything happened. So they left the property at the end of February. In March, this thing hit full swing. Yeah. And I didn't have anybody in it until, or didn't really have, I kind of just held it and was able to use, different things in order to keep it, it's under a business name. So that property, it had some business savings, but I was also able to take some, move things around and make sure that we were covered. So
you had plenty of access to capital to maintain control of that deal.
Yeah.
There you go. What's that word? The ability to maintain control of a deal. Where can that show up on a life insurance illustration? How can you explain that to your best friend or, your brother? I mean, I'm just saying.
Yeah. And that's the hard part, is like having somebody understand, the cash values within the policy and understand how that policy can grow over time. That's something you really have to sit down and work through the numbers and say, this is what I put in here. And it's, but at the end of the day, like, it's a massive, like, it could be a massive windfall for my family. When you think about, like, when I look at my 10-year plan, being able to say, well, we pulled the trigger on this thing that didn't walk out the door, and it's all because we had already kind of saved a little bit through the policy, and that's now an asset that I can pass down for, as long as we protect it.
Cash flowing, appreciating asset.
Cash flowing,
real property. Uh-huh. I've equated many times in the past, if we consider real estate for a minute, and I like real estate, and not everybody does. I'm a poor landlord. But why real estate? It's real property, right? It's has some tax advantages.
Yeah.
It should appreciate if you're doing your job, and it should cash flow. Mm-hmm. And then there's a deferred benefit. Someday you're going to sell it. Currently, we enjoy a step up in basis, but you give the politicians enough time and they'll eliminate private property. But currently, there's, like I said, a deferred benefit. You're either going to sell it, you're going to give it away, or there will be a step up in basis. And if you compare those characteristics, and I probably missed one or two, and you look at life insurance, it's real property, it's a private asset, it's an appreciating asset, it's a cash flowing asset, and there's a deferred benefit. Nobody's getting out of here alive. We're all going to graduate.
Exactly. And
there's preferential tax treatment. So they combined, they work very well.
They work very well together. But I think one of the cool things about having this is, I didn't have to go. You don't have to go talk to anybody about what do I want to do.
Yeah, you didn't have to call me, did you?
I didn't have to call you.
You didn't have to call my office. Nope. You only call every now and then to say hi, and I appreciate that. I'm just saying.
And I mean,
you didn't have to ask anybody at the home office, can I please have that? I mean, we're all gentlemen and polite and civil, and I'm just, it's okay to thank you and please, but and I mean, you were given orders. Send me a check. I want this much.
Yeah.
Right.
And literally, it's like 30 seconds on the internet. I mean, it's so
don't overdo it, man. These mutual companies are like, they can barely operate in the 21st century. Technology sometimes, I love them. I'm just saying.
It's there are some things that could be upgraded on the portal, but
right.
But and it's not that I don't have a good relationship with my banker, right?
Sure.
I and I know that I probably could have gone to the bank and filled out, the paperwork and got
and he'd have taken the deal to the loan committee.
But
cough up 2 years of income and assets and, tax returns.
But I didn't have to do that. And it was nice to be able to say, hey, I can do this. And it's not going to really, because it's money that I'm not always looking at, right? So it's not like I'm taking it out of my savings account. I'm taking it out of a place that's still, even though I've taken that money from there, the company thinks it's still there, so it continues.
Yeah, and to be clear, the cash value,
yes,
is sitting there growing as we speak. This is Saturday; markets are closed. All right, your values are going up, even though there's a loan against the cash value. Yes. So you've just taken an asset and collateralized it. So we're using the life insurance company's money, but the policy, because you own non-direct recognition policies,
yep,
or policies with a non-direct recognition company, which just means that the companies that you own pay dividends regardless if there's an outstanding loan.
Exactly.
And in the infinite banking world, there's a big, not a big, but it's a topic of contention potentially. And I just say it does make a difference. Is it at the end of the world? No. As long as the company pays a dividend, there are some companies that they say they're going to pay a dividend and they illustrate that they're going to pay a dividend, but then what they actually pay is like pretty weak. So, not to stray too far off, but you've got an asset that is getting better and better every day by the mere existence, and then you're leveraging that asset on demand, not subject to the market conditions of real estate or any other market valuation. Right? It's a guaranteed loan. Why? The lender, the life insurance company, is guaranteeing the underlying asset, the cash value. I mean, so you just tell them where to send the check.
That's right.
That's pretty dang powerful.
It is. It is very powerful. And, you know, like I said, we've used it for different things. So, and again, it's nice to be able to, if there's something that I want to do, be it, you know, do a real estate deal or, you know, I've taken a loan on, I've taken a loan out before to, you know, well, okay, there's this thing called Bitcoin out there. Well,
you borrowed cash against your cash value and bought Bitcoin?
Bought a little bit, you know. I thought,
it doesn't take much when it goes up. What is it?
It was 50, kind of that FOMO,
70? I don't know. It's like,
you know, kind of that FOMO thing. You know, I don't have a whole lot, but you know, I did put a couple of $1,000. You know, and it's
everybody wants to know when, and if you bought it back then, why wouldn't you buy it now? It's going to 400.
Yeah,
I'm just talking.
I know. Got a little, but it was also one of those things. Like, you know, I did make there when I dabbled into it. I probably should have did a little bit more research into the, you know, into the crypto and looked a little. I
should have bought XRP.
Should have bought a couple of things, you know, and it's one of those like it. But the nice thing is it like having that ownership of not having to go ask somebody to use whatever I want to do. Like, to me, that's a huge freedom thing, right? Like, if we, you know, we like to go travel, we like to do different things, we like to, you know, and one of the things that I also have really taken from this journey is, you know, I've listened to Nelson a couple of different times. I've been to several of the different, seminars and different things that y'all have hosted. I've listened, you know, I've watched some of the podcasts. I've read quite a few books around this concept, and it's also given me ideas of how to also leverage some of these things that, you know, you got to save for anyway, and you have to pay for anyway. So like last year, the last loan that I took is kind of a funny one. Every year we have to pay property taxes, and every year we have to pay insurance on our home, right? Well, one of the things that my house got to a point where had enough equity built into it that I got rid of the escrow account and got rid of that extra, you know, that, and you know, a lot of times first time home buyers are like, you need the escrow account, you need to have that protection and that kind of stuff. But then you start really thinking about it. Well, an escrow account's just a savings account that the mortgage companies opened up for you, and then they put certain rules about how much money has to sit in that account. They're not out there shopping the insurance. They're not out there trying to lower the homeowners taxes. They're not doing the homestead stuff at your county or any of that kind of stuff. I was doing that stuff, and at the end of the day, it's two checks, right? It's a check, you know, it's a check, you know, the insurance company is a check to the county. I can write two checks. I'm fully capable to do that. So one of the things that I used my policy last year for was we got into a situation where we like to travel, we like to use hotel points, we like to use, you know, that kind of stuff. So what we did was, well, I'm going to run up this credit card to get these big bonus, you know, of, you know, 50,000 miles, 150,000 miles, whatever it is. Float that money for 30 days.
It didn't pay any interest.
Didn't pay any interest.
To them, anyway.
To them, and then take a policy loan, pay it right back, you know, as far as when it's comfortable. So that was one of the things that we did. We actually increased our, you know, I look at those as a currency as well. It's not a money currency, but it's a currency to be able to exchange for, you know, hotel and flights and that kind of stuff. And if COVID hadn't hit, we would have been using those last year. But, you know, it is one of those things that having that access where I don't have to go say, well, what I want to do is float this thing and kind of work it out, just ask for the policy loan and they send it right to you.
So it's really, once you, you pay the premium, and you understand the mechanics of how your policy works and the ease.
It's a financing vehicle that is really nice to have. And, like I said, we exercise through my policy quite a bit. And I send money in, I take money out, as we need it for different things. The newest vehicle that we bought, we did half of it through the policy as well. That was one of those things. So that's why that loan the loan balance kind of fluctuates in there, because I repay and then I pull. And, but again, it's using that vehicle to do different things that I need to do. When we looked at a vehicle, we went from a family of 2 to a family of 5 in a pretty
need that third row seating pretty quick.
we needed that third row. Like when we were a family of 3, it wasn't so bad. Right. But when we got to a family of 5, I had to go finance a pretty large vehicle. And
you spend a lot of money nowadays on vehicles.
them ones that have when you start looking at that bigger vehicle that has a good size third seat, like you're talking a 40-ish, 50-ish, kind of thing. And part of what we did was we ran money in, we pulled part of it out to get the payment to where it made sense for us.
I love that. We did the same thing a couple of years ago. I mean, our family's not growing, but my wife wanted the third row and perfect. I don't care. I want her to have everything that she wants, So we go shopping and we wound up with a Chevrolet product, and there were no deals on it, right? Because Chevrolet's thinking, oh, this is going to take over the world and be the best seller in the automobile industry. And, and I'm like, whatever. So, this is probably the third or fourth car we financed since. Probably more than that, but doing the deal, going in there, doing the deal with the F&I guy, he's like, well, here's your 2.9, I think is what the interest rate was. And so, we bought the car, right? And I bought an extended warranty on that because it has that European auto stop at a red light. Yeah. That 2 years later, I discovered you can turn that on and off. I didn't know that.
Oh, you know how to do that?
No, I don't. It's my wife's car. I don't even drive it. Me too.
I have that on my new one. It's that auto stop.
The first time I experienced that, I was in Austria with Nelson. I'm sitting in the front of the taxi, right, and the car's dying at the stoplight, and I'm like, I'm gonna have to get out and walk, But okay, so we buy the car. And I got a hard time. I don't know that I've ever even really talked about this on an episode, but it was like 2.9% financing, and we financed the down payment. And I was talking to a couple of clients and friends afterwards, and they're like, "Well, James, why are you going to borrow money at 5, right? When they were going to finance it at 2.9?" I'm like, "Well, I financed the down payment." But why didn't you finance the whole thing with their money, right? And then you have the mental gymnastics and the argument. How much of the problem do you want to be a participatory in? Because if we go to the bank, and I'm not disparaging local lenders at all, but the money doesn't exist. If you go borrow money, it doesn't exist until you sign your John Henry on it, right? So you and we create the inflation whenever we sign our name. So you're part of the problem if you borrow money, whether you feel good or bad about that, or I'm not even being judgmental. I know that I'm part of the problem when I borrow money, right? And Nelson said it would take the average bear 14 years to get rid of the snakes and dragons. It took him 14 years to get rid of the snakes and dragons. So he was relating himself as the average bear, right? Okay. So in defense, I'm talking to my friends, and they're like giving me a hard time, kind of questioning, not really a hard time, but it's okay to be challenged. It's like your family, y'all are very open in your circle of friends. I mean, that's, iron sharpens iron, and I appreciate that. So a couple of them were really giving me a hard time, and others were just explaining. And it really got down to this. This is where it got down, and you alluded to it a minute ago. This is my wife's car. She wants what she wants. I mean, they drove this in from East Texas, particular color and the model. And I mean, there was 2 in the country kind of a deal. And so here's how we determined how much we were going to pay down. Right, and we paid a pretty good amount down. And then I didn't finance the extended warranty with them at 2.9. I borrowed against life insurance policies from the insurance company. And then people are saying, well, why would you go borrow at 5 when you could borrow at 2.9? And I understand that I'm being part of the problem. I don't want to be part of the problem. I want to maintain control. Ultimately, that's my primary goal, is to maintain control and then to take advantage of every opportunity that presents itself. And I'm a firm believer, because it's what I've come to believe, that practicing the infinite banking concept over time elevates and heightens your ability to even recognize an opportunity, because everything walking down the street is not an opportunity. You go to all the real estate deals you want to. Every deal that's presented is not an opportunity.
Exactly.
Right. Okay. So, and here's how it got down to. I've got the HP 12C downloaded on my iPhone. I can calculate even and uneven cash flows and blah, 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 blah. So I'm like, Jana, just like the old school F&I guy, what would you like your monthly payment to be? And we're not financing it, for 6 or 7 years. It's 48 months, that's it, at the most. Where would you like your payment? She told me where she wanted her payment, and it was higher than the previous car we financed because of taxes, inflation, and whatever. Mm-hmm. And then, so that's her payment. So how much do I have to pay down to get that payment? Right, and then I'm going to add additional interest on that. So that's how we determined how much, we wanted to finance.
And, it's one of those kind of things. Like it hurts my heart. I mean, I grew up that, 5 years was a long time to finance a car.
Man, when I was growing up, cars couldn't outlast that note.
Yeah.
And I grew up, my daddy was in the car business.
And that's one of those things, like when I see these things that we're going to finance you for,
92 months,
72, 84. No.
Right.
60 is the limit for me.
Yeah.
I mean, but I mean, cars are crazy now as far as and that was part of our decision was, hey, I don't want to have a $500, $600, $700, car payment. I want to have a nice, easy, I think it's like $320 something part payment, and I want that, and I want to be sure that, because the other thing that I do is I have this financial program that I can go in there and I can say, okay, it's this, and then it tells me based upon my income and what's coming in the door, what, it's kind of like they call it a GPS thing, and but it's one of these that kind of helps you from a debt perspective, and you can go in and you can put in and play, like if I buy a car at this or that, if I went in and put in a $600 or $700 payment, it then would tell me, well, you're sitting at 5.8 years or 6 years to pay off your debt. Well, now it's 13 years or 14 years or and those are decisions that we take into consideration, especially when we're buying cars or taking out, looking at I see these things as like, well, you could get this kind of loan. Well, if I do this kind of loan, well, put it in a little program, because sometimes I'm not, I could probably figure it out in Excel or something like that. But sure. I have this other little thing that I work through, and every decision we put through the program. And again, that's one of our things. It keeps us on track. Cost us a little money for that financial software. It's not free, but it's one of those that we found a lot of value, and we plug everything into it. I've got my premium payments, my life insurance payments every month budgeted in there. I've got my, car payments, my house payments, my electric bill, my phone bill, all of that stuff goes in there. And anytime we make a financial decision, we put it in there, we test it out, make sure that it's going to do what we want to do and that it doesn't take us off of that longer term plan. Right. Because ultimately that's the goal, is the long term plan and being able to get where we want to go.
Have you, and I'm just asking, sure. Do you have the cash values that calculated into that program in any way?
I don't. I periodically will go in there and look at, because it does kind of look to the future. I also look what if I was to shift so right now, my loan balance is in there as far as what I do owe. to pay back if I want to pay it back. Mm-hmm. It's in there, but it's at the end of all of the other debt.
Yep.
So it doesn't start until.
I'm glad you said it, because that's kind of where I was going. There's lots of software, there's all kinds of marketing programs, and I'm not anti-marketing. Just personal philosophy is I subscribe to, like, I got it from Jim Rohn. It made sense to me. It's attraction rather than promotion. So I'm a salesman, a father, mm-hmm. A brother, a cousin. I'm just saying that, like previously, every now and then somebody says, "Oh, James, you're a great salesman," and it's almost like an insult. Sometimes it's a compliment, but yeah, okay, but I'm also a husband. I'm a father. I'm a brother. I'm an uncle. Anyway, so I don't want to disparage marketing. I'm not talking about that, but the smoke and mirrors kind of presentations I loathe. I cannot stand them, and I'm like, sometimes I get angry if I have to hang around them, or I can't get them off of me when it comes to infinite banking concept. So having said all that, this is what I want to say. There's lots of programs out there. Mm-hmm. People, run Excel spreadsheets, and they do all kinds of machinations to trying to convey or demonstrate the how good life insurance is when you borrow against it to get out of debt. And that is one thing that you can absolutely do with capital, is get out of debt. No kidding. Okay.
Yep.
So it's very difficult, though, to clearly, honestly, without manipulating, straightforward, demonstrate on an Excel spreadsheet really what's going on with debt over time. But I'm getting to this point where, popular financial gurus, promote get out of debt. No question, the debtor is servant to the lender. Mm-hmm. No question. And the biggest cause of stress is financial, right? And the biggest result of stress is poor health, divorce, depression, suicide, and every other terrible mm-hmm. thing. So I'm not, diminishing how important. It's vitally important to be out of debt.
Yes.
Right. Okay. So if the world is telling me that I need to stop everything that I'm doing as far as savings or investing, other than $500 or $600 or whatever, and then pour all of my income into debt. And so what is income? I'm exchanging my God-given abilities, talent, strength, time, hope, energy, intellect for this income. And I'm probably taking away from my family time to do that. Mm-hmm. And I'm going to take all of that and dedicate it to debt, so I can become debt-free. So then I can begin to save, so I don't wind up in that position sometime in the future. Sounds good, takes a lot of discipline, and you didn't accumulate the debt because you had uber discipline. And I'm not saying that discipline, if you don't have discipline, Nelson, you say you might as well go dig a hole and jump in it and have someone cover you up. You're right. Okay. This concept takes discipline. We don't have to use big, fancy illustrations, and we don't have to talk about $25,000 or $50,000 or $100,000 or $500,000 in premium. No. Consistently setting aside money, i.e., paying a premium. And if I can circle back,
sure.
Whenever you started, you were a one-child family or childless?
We were childless.
Okay, and you don't have to answer, but did you even have death benefit when you began?
So I had some through my company, which Perfect. I think everybody has, or most people have, some sort of term, something,
right. That covers you while you're employed. Right. And sometimes it's portable and sometimes it's not.
It wasn't portable. I had a very small, like one of those, it's a policy my grandma got when I was a baby. So it would have covered, I think it covers like $2,000. So like it might cover partial funeral expenses.
Which was probably the cost of a funeral when your grandmother purchased that.
So right? I mean from a life insurance policy perspective, all I really had
temporary
was temporary. And I mean, that's one of those things that, Yeah, it's great if I'm working for that company, but if I leave that company, now the company
you get mad, get fired, retire,
goes away.
And the closer you get to mortality, the likelihood of that being enforced is nil.
Yeah.
So in here, fast forward. Well, let me say, you probably had a lot more life insurance than you cared to own originally, right? Yeah. Although more is better than none, or more is better than some. But now, 3 children later, does that death benefit have a different?
It has a very different kind of connotation as far as. So number one, I know that if I was to pass, everything that we got, as far as from a debt perspective, would be taken care of. Like, I don't have to worry about, is she going to have a house? Is she going to be left with credit card debt? Is she going to be left with student loan debt? Is she going to be left with car debt? And I mean, we have debt. I mean, we're paying down debt, but it's, I think we're like every other American family. We've made some bad decisions. We've done some different things, and we have debt, but I'm not stressed about it, because I know that, number one, we have a plan. We talk about, and I think that's one of the things when they talk about the stress around finances, is folks don't talk about it. They don't make it a part of their regular conversation.
Oh my gosh, preach.
It is a very regular part of our conversation, not only with me, but it's also with her. It's with our children. And one of my kind of dark secrets is I coupon too. So I look at everything, but with the couponing, I teach my kids that if I can save $50 or $60 on a grocery bill or a CVS bill or whatever bill, well, that's $50 or $60 that we can go buy Six Flags tickets.
Yep.
So there's an understanding of the value of the money and that kind of stuff. So I think when, part of this forced me to also really look and really think about our finances. And I stress about it. I still stress every month about, paying the bills and all that kind of stuff. But it's not like super huge stress. Yeah. It's just, and I know the money's always there as long as we're employed, we're bringing stuff in, but I'm also not forcing everything to pay down the debt either. I'm strategically paying down the debt, and we are rapidly moving down that path.
Mike and I had so much fun, we went a little long, so we're going to cut it here, and we'll pick it up in part 2. Thanks for listening.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.